This episode aims to provide the viewers with an understanding of auditing in the public sector, as well as the legislative and reporting requirements that are specific to the public sector in South Africa. In this episode, we will cover the legislative requirements and the audit process followed by the Auditor General of South Africa, as well as the related reporting processes. In terms of Chapter 9 of our Constitution, the Auditor General of South Africa has been established as a constitutional institution. Our Constitution further outlines the functions of the Auditor General, which requires the Auditor General to audit and report on the accounts, financial statements, and financial management of all national and provincial departments, all municipalities, and any other institution or accounting entity required by national or provincial legislation to be audited by the Auditor General. To note that when the term Auditor General of South Africa is referred to, this is with reference to the organization. However, when the term Auditor General is referred to, this refers to the individual who has been appointed by the President as the Auditor General. Our Constitution also mentions that the Auditor General has additional powers and functions prescribed by national legislation. In this instance, one of the key legislations that specifies these powers is the Public Audit Act, which will now be discussed in more detail. The Public Audit Act was established in the year 2004 and was subject to key amendments in the year 2018. The objective of this act is to give effect to the provisions to the Constitution that have been mentioned. The Auditor General is the supreme audit institution in South Africa. The Supreme Audit Institution is defined as the institution which, exercised by virtue of law of a country, is the highest public auditing function of that country. In other words, each country would have their own Supreme Audit Institution that would be responsible for auditing the public sector. This act stresses the independence and impartiality of the Auditor General. Specifics regarding the requirements outlined in our Constitution are expanded through Section 4 of the Public Audit Act, which in summary states that the Auditor General must audit and report on the accounts, financial statements, and financial management of all national and provincial departments, all constitutional institutions, Parliament, each provincial legislature, all municipalities and municipal entities, and any other institution or accounting entity required to be audited by the national or provincial legislation. Therefore, in terms of the Public Audit Act, these organizations cannot source their own external auditors, since the Act obliges the Auditor General to audit these organizations. The Auditor General may audit and report on any public entity that is listed in the PFMA. The word may indicates that with regards to public entities, the Auditor General does have discretion as to which public entities it may audit. If the Auditor General opts not to perform the audit of a public entity, then the Auditor General must give notice of that decision to the public entity before the start of that entity's financial year. An example of the public entity that the Auditor General does audit is the South African Revenue Services, since the audit report of the South African Revenue Services is signed off by the Auditor General. In recent times, we have been seeing the Auditor General applying such discretion and choosing to audit public entities that it previously opted not to audit, such as SAA, Denel, and the SABC. The above organizations that the Auditor General audits are referred to as auditees in terms of the Public Audit Act. As part of the key amendments to the Public Audit Act in the year 2018, the concept of material irregularities has been included, and this amendment has also provided the Auditor General with certain additional powers that it did not have prior to these amendments. The definition of a material irregularity as per the Public Audit Act is as follows: any non-compliance with or contravention of legislation, fraud, theft, or a breach of a fiduciary duty identified during an audit performed under this Act that resulted in or is likely to result in a material financial loss, the misuse or loss of a material public resource, or substantial harm to a public sector institution or the general public. To note, a process must be followed by the Auditor General if a material irregularity is identified through the normal audit process. Upon the identification of a material irregularity or suspected material irregularity, there must be a notification in writing to the accounting officer or accounting authority, where applicable, requesting for proof of certain actions that need to be taken, such as stopping the irregularity, preventing or recovering loss, and actions taken against the responsible person. Follow-ups are done by the Auditor General on the status of these actions. Take note that there are some key aspects to this definition, namely that there must be a non-compliance and it must have been identified during the audit. Once a material irregularity has been identified, the entity must be notified in writing, where the entity is instructed to stop the irregularity, prevent or recover the loss, and also take action against the responsible person. If the entity has not taken any appropriate action regarding the material irregularity, the Auditor General is to report on the material irregularity in the audit report, along with recommendations, or that the material irregularity is being investigated. Where the accounting officer or accounting authority has failed to implement any remedial action, the Auditor General must issue a certificate of debt to the accounting officer or accounting authority, requiring a repayment of the amount specified to the state. Further details on the process around this new definition and how it has been implemented by the Auditor General of South Africa can be found on the website of the Auditor General of South Africa. These details are also specified in the Material Irregularity Regulations in terms of the Public Audit Act. The Public Audit Act allows the Auditor General to determine the standards to be applied when performing audits and the frequency, nature and scope of such audits. This Act also allows the Auditor General to issue directives on these matters. Therefore, on an annual basis, the Auditor General issues a directive to provide clarity on these matters. This directive is seen as an extension of this Act. In terms of the latest directive, the Auditor General has determined that it will use the international standards of auditing when performing its audits. To note, for any auditor that is new to auditing in the public sector, this annual directive issued by the Auditor General is a very important starting point for that auditor to understand the scope of the audit. This Act also empowers the Auditor General or authorized auditor, where the Auditor General has opted not to perform an audit, unrestricted access to documentation of its auditees. Types of reports. In terms of this Act and the related directive, the Auditor General must prepare a report on each audit and must include an opinion on the financial statements of that auditee. Furthermore, the audit report must reflect findings on non-compliance with specific matters in key legislation, but does not provide assurance by way of an opinion or conclusion with regards to compliance with key legislation. The determination of compliance subject matters to be included in the scope of the compliance audit is predetermined by the Auditor General through the directive. Note that this requirement is also placed on auditors who audit public entities that the Auditor General has opted not to perform. The audit report must also reflect an opinion, conclusion or findings on the reported performance of the auditee against its predetermined objectives. This audit report must be in accordance to any legislation applicable to the auditee. More detail regarding performance reporting of the auditee can be found in an earlier episode of this series. In terms of the related directive of this Act, assurance on performance reporting in the form of an opinion or conclusion is currently included in the management report to the auditee. If there are any material findings, these are included in the audit report. The Public Audit Act also allows the Auditor General to report on special audits and on any matters arising from an investigation that should be in the public interest. The Auditor General also issues general reports annually based on its audit outcomes for that year. These general reports are issued at different times of the year for the various spheres of government and report on items such as material irregularities, financial reporting, service delivery, the status of audit outcomes, and procurement transgressions. Requirements of the PFMA. The Public Finance Management Act also has some legislative requirements on the audit process, and these are as follows. The PFMA requires that the Auditor General must submit an audit report on a department's and constitutional institution's financial statements to the accounting officer within 2 months of receiving the financial statements from these respective auditees. Departments and constitutional institutions have a financial year end of March 31st. Practically, this means that if these financial statements are typically submitted to the Auditor General on the 31st of May, then the audit report of the Auditor General is due by no later than 31st of July. Requirements for the MFMA. Similarly, the Municipal Finance Management Act places a responsibility on the Auditor General to finalize its audit of a municipality and municipal entity and submit an audit report to the accounting officer of that municipality and municipal entity within 3 months of receiving that municipality's financial statements. Practically, this means that if these financial statements are typically submitted to the Auditor General on the 31st of August, then the audit report of the Auditor General is due by no later than November 30th. This concludes this series of videos relating to the public sector.